Hey everybody, this is David Skarica, stock chart of the day. Today I was actually going to do something on the travel industry, but I had some news come across my desk this morning when I got up. One of my subscribers sent me an article from CBS Market Watch on Stan Drunkenmiller, talking about how he got rid of Alphabet, some Amazon, and then he bought Barrick and Newmont, which is interesting. Now, granted, these reports that come out, they're from the previous quarter. So that means he would have, who knows when he bought Barrick. They don't talk about that. They just tell you what he accumulated. So the question is, did he bought Barrick at the beginning of the quarter? You can see this was October when, he could be roughly flat on the trade, the lows, or, here in November and he'd be slightly down, or did he buy it near the top? Drunkenmiller a pretty smart guy. So I bet you he bought it in this area. And then would he had sold it when it started to go down? So anyhow, but I think it's interesting that he's selling some tech stocks and then he's accumulating gold and precious metals. So this is Newmont as well. You can see Newmont has not done well. So these are all pretty beaten up now. Like if we look at like the HUI index, actually if we look at the GDX and divide it by the GLD, so by you'll see that gold stocks now are extremely cheap compared to the price of gold. Like let's go back 10 years and you'll see that basically other than like panic crash of 2020, this kind of anomaly, we're kind of right back to the 22 levels, which actually, again, you draw a line, really are the lowest levels since the gold stock bottom of 2015, 2016. So we're at historically very cheap levels compared with the gold stocks compared to gold, and they tend to be more leveraged. And I think that one reason that gold stocks now underperform so much on the downside is actually the advent of these ETFs. We all thought, and this is a warning to the people who are bullish because of the Bitcoin ETF. We all thought that, oh yeah, when the GDX came in, I was like, oh yeah, this is great. That means there'll be all these inflows into gold stocks. All these people that don't want to try to pick individual stocks will just buy an ETF. And then that will obviously, when the ETFs get inflows and they have to buy the stocks, and that sends the stocks higher. Problem is, it works the other way too. When there's been outflows out of these ETFs, when investors are no longer interested, they dump them, and then the ETF has to kind of flush everything out. So I think actually in the long run, and if we go look at with the advent of the GDX, we're going to go back 20 years now, it started to trade. You can see here in 2006. But interesting enough, that was essentially the top of the gold stock ratio. Even if I go show you the HUI, which traded before, actually I'll put the HUI now too, so you can see it. And you can see if I showed you the HUI going back to 1997 when the HUI started. Say that's the GLD was only back then too. So let's go HUI to just the gold. Yeah, you can see that here, and then in 2006, basically 2008, we topped out. And actually, ever since we basically had this ETF, the gold stocks have underperformed the metal. Now, part of the reason is, in terms of the combination of costs and the gold price, this was kind of the best time, right? Pre-financial crisis, right before oil prices really spiked in 08. And, gold prices went from 250 to 1,000. And what happened is until 2000, then gold companies got really lean, right? So that first 5 years was fantastic because they were still lean. And, when gold went from 250 to like 700, they were really, really pocketing those profits. And then costs began to go up because of long-term higher inflation. I remember a lot of gold companies produce overseas, and we saw this, with the with a lot of other things as well in terms of the costs. And I remember a lot of these foreign currencies went up, so all of a sudden they weren't getting as much money back in US dollars. Now that hasn't been the case in the last 10 years, but again, we see as the gold kind of entered this bear market and costs did not really go down as much. And then we can see here, and actually this really shows the HUI, that the chart I'm talking about. The other chart I said was just 10 years. Well, when we go look back longer term, you can see the HUI, other than, again, the little crash here, and then in 2015, 2016, which was the low for the gold market, the HUI compared to gold is at a historically low level. So Drunkenmiller is not a stupid guy. He knows what he's doing. So, and he's, like I said, he bought Barrick, he bought Newmont, etc. So And again, as I've stated over and over again, that I think, we have weak retail sales today. So we're going to quickly look at the bond. The bond is up a little bit on that. Gold is actually, we'll look at the GLD, is up almost $10. And again, I think when we break this, we'll explode to the upside. But again, I think, you're going to see the weakening in the economy now. Now, the question with the stock market is, does it view it as, okay, the rate cuts are coming, this is positive, or do they view it as, okay, these companies are going to have a lot less profits? But if you look at things like credit card delinquencies, I think a lot of people, maxed out their credit cards, over that holiday period. That was kind of like the final flush. So I think we're seeing this weakness in the economy. I know the January employment report was strong, but employment is a lagging indicator. So I think you're going to see this weakness. And the question is, do the Fed rate cuts help? Or do they, or do they, or does the decreasing profit margins for companies hurt? But here's the thing. Either way, I think that gold in a recession or in an easy environment goes higher. And I think Drunkenmiller knows that too. So that's our stock chart of the day. The travel one will come out on Friday. I'm actually going to do it right after this. Because sometimes it's just easier when I'm you get on a roll sometimes, I get on a roll doing these, and I just like to, continue doing them when I'm feeling good, So we will do this.